RBNZ decision. Well, let's get some analysis, some colour around all of this. And joining us now from IG in Melbourne, going to get some thoughts from Chris Weston there on the Fed decision, of course. What did you get out of the statement there? Any interesting points aside from that as expected decision?
I think the fact that we got a clear indication that the playbook is going to be 10 billion a month and maybe even more into the second half when the austerity comes out, the sequestration ends, and you know, I think that's the rule book there. I mean, anyone looking for a sign that they were concerned about emerging markets, they may even look to stop the taper. Was sadly mistaken. It wasn't even mentioned in there, so you know, hence why we saw further routes coming through after that side of things in the emerging markets. I think one of the things that we looked at was the fact that there has been rotation in the Fed this year, and we've seen Eric Rosengren, who of course was the lone dissenter at the previous meeting in December, and he's obviously left now and he's been replaced. But we know that Kosha Lakota has come onto the board. He is a dove. I mean, he's extreme, and he's been very dovish of late, and there was a possibility that he may come out and actually say, look, I'm happy to keep stimulus in there at the same consistent level. Now, he was actually voting for a taper as well, which meant every single member of the voting committee were keen on the taper side of things as well. That's the first time we've had unanimous viewpoint from the Fed since about 2011. So that again is quite a hawkish assessment there. They did upgrade or gave a slightly more upbeat view of the economy. And ultimately, anyone saying they were going to hold back because of the volatility in the S&P, well, the Fed aren't day traders. The S&P is 4% from its highs. I mean, clearly they're not going to be concerned about that. They showed no concern about emerging markets. They tapered, and it was unanimous as well. And I think stock markets clearly didn't like that side of things as well. So anyone calling for the halt of the taper, which I know there was people out there expecting, they were sadly mistaken today.
In terms though going forward, I mean, what do markets look to though? I mean, Ben Bernanke made it clear that the taper was going to be gradual. The expectation was that it's going to be wound up by the end of this year. So, I mean, how do you expect markets to view this going forward?
Well, I think March meeting's going to be very interesting now. Janet Yellen's going to have the press conference, and the market's going to be dissecting that in every possible shape or form. I think there's a realistic view here that the Fed are going to put much more emphasis on that market, on inflation, rather than the job market. The job market has predominantly been what they've been more focused on. Of course, they've had price stability in their focus as well. But it's pretty clear that QE3 is doing absolutely nothing to spur on inflation. But I think that's what's going to be the situation that we're going to be looking at in the March meeting when they have the next press conference. So people are going to be looking at that. And of course, we've got to look at core PCE. I think it comes out tonight, actually. And I think the next monthly print will be very looking as well. But if we do get that growth that people are looking for, then the Fed will look to come out more aggressively, and especially if they look to start doing it in bigger lumps, bigger sizes, bigger tranches than 10 billion going into the second half of the year. If we're seeing outflows now in emerging markets, so you haven't seen anything yet. I mean, that really could deteriorate going into the back end of the year if they really step it up. But that isn't a concern for me. The concern in emerging markets isn't a concern for me, and it's not the concern for developed markets, and it's not the concern for the Fed. The concern that we have around this side of things is the unwind of the biggest carry position the world's ever seen, which is what's happening in the Bank of Japan, and that's what we saw last night. So for me, it wasn't the rout in emerging markets, it was the unwind of the carry trade, the buying back of these yen positions from all sorts of Japanese traders, life insurance funds, pension funds, and that for me is the bigger concern rather than what we're seeing in emerging market trading there.
Interesting to watch the Kiwi falling after the RBNZ decided not to raise rates this meeting. Do you think, though, it's pretty much going to happen in March?
Yeah, it won't happen in February. I don't think they've got a meeting then, but I think the next one is in March, and they flagged it today. I mean, the market had given a 40% probability that they were going to hike today. We know ANZ, HSBC and Citigroup were calling for the central bank to raise rates there today. Of course, they didn't do that, hence why we did see the Kiwi dollar jumping. If you look at Aussie Kiwi, had a nice 70-point jump. So it's, in hindsight, if you followed the bulk of consensus, it was a fairly predictable trade, to be honest. But yeah, I think they've come out and said that they're going to normalise rates. We've got to recall the last time these guys cut rates was an emergency cut after the Christchurch earthquake. And Graham Wheeler talked about it today. He said that they were wanting to go back to a more normalised stance. They do want to raise the overnight cash rate. March to me seems a very high probability trade, unless we did see some signs that the housing market was really coming off. I mean, Graham Wheeler talked about normalisation, signs of normalisation in the housing market, which is great to see for them. We know that their macro-prudential moves are starting to bite, and that could hold them off. But I think for me, his rhetoric today suggested they are looking very, very closely at rate hikes. March, to me, seems pretty much a done deal now. And if you look at the markets, I think the more interesting point is, will they hike by five hikes over the next 12 months? The market's pricing in over 125 basis points over the 12 months, which is extremely aggressive from this central bank. We do know history suggests that once they go pretty hard. But are they going to go that much? The Kiwi's pricing in a lot of rate hikes at these kind of levels. That's why I personally believe that the Aussie Kiwi from here has found a bottom.
Just looking at our market, expecting a pretty weak start.
Yeah, exactly. I mean, yeah, we're calling it down 1.3% in Australia. The bigger interesting situation. I mean, we always focus solely on the ASX, but let's look at the volatility we're going to see around Asia today. We've got to look at the Japanese market. We're calling that the Nikkei down 2.5%. I mean, the yen was bid up heavily against everything, notably against some of the Scandies, also against the Kiwi, of course. It fell very New Zealand Kiwi fell very hard last night, but dollar Kiwi tested that dollar yen tested that 200 that 102 level, and the Nikkei is going to get absolutely slammed today. We've obviously got Fortescue in focus today. We're expecting, I think something like 28.8 million tonnes on that quarterly, on that December quarter number, and it's looking quite hard for them to reach that 2014 guidance. But we want to see good numbers from these guys today to try and alleviate some of those concerns. The iron ore price is clearly working against their favour. That was down 1%. We expect to get Facebook's earnings. It's not going to have a major impact for our market, but we do know a lot of people are trading the US stocks these days, and I think that's an interesting thing.
Yeah.
BHP down 1.3% as well.
And just on Facebook, just out, and I see shares rising in after-hours trade after those numbers came through there. So I guess perhaps one thing that might temper the losses.
Well, I think what's interesting with Facebook, I mean, around earnings season, we're coming into earnings season in February time as well. You've got to look at companies that have a history of beating, and Facebook have beaten 5 of the last 6 quarters. And if you're saying the shares have risen, we were looking for, the market was looking for about 27 cents on the EPS line and revenue of about 2.36%. But most importantly, if you're trading Facebook, if you're holding Facebook shares, it's about that mobile ad market. You go back to Q3, these guys they generated about 49% of their revenue from from mobile revenue. They're expected to increase that to about 54%. So I haven't looked at the numbers.
Yeah,
but,
just to let you know, revenue beating expectations that you just mentioned there, 2.59 billion, and an increase of 49% year over year on mobile advertising revenue, about 53% of advertising revenue in quarter
it's just
4.
In line there.
Yeah.
Now, these guys have beaten now, 6 of the last 7 quarters. I mean, these are the stocks that you want to be leveraged to going into earnings season, ones that just continually, beat expectations. And Facebook is one of those ones that has done very, very well, and the share price is clearly reflective of that now.
Yeah. All right. Look, Chris, it's great to get your analysis as always. Thank you so much for that, and we'll chat to you through the session.
Thanks, Bridie.
Chris Weston there.